Thank you for watching the SMB Forex and Futures weekly trade analysis. My name is Mark Principato. So let's start today with the S&P. What we're going to do in this video, as we always do, is we're going to examine the S&P futures, actually the S&P CFD. We're going to be looking at euro dollar, pound dollar, and Aussie dollar. We're going to be examining these instruments on the bigger picture. And the purpose of that is so we can get some perspective and get a sense of what kind of scenarios we can see this week and what we should do. All right, if one of those scenarios unfolds. So starting with the S&P. Remember, this is the CFD, but this is basically the same as the futures. All right, you can use one or the other. As we could see on this 4-hour chart, this thing has been very strong, right? It's made new highs, yearly highs. Now, let me just consolidate this chart. This is a 4-hour chart. Since this area here, I pointed out this area here that the strength was coming in. This was weeks ago. At that time, I could not tell you that we were going to go up here. I could not tell you that. But I could tell you that we were strengthening in something that was still generally strong. Now, as we started going higher, and we started taking out these resistances and making higher lows, it's pretty clear that it just wants to go higher. Even up in this area, I was saying, this thing wants to test that high. And it did. Not only did it test the high, but it closed. It closed pretty strong. I kept pointing out in this area, I kept saying, something that consolidates near a major resistance. This was a nice reference pivot or resistance that we could have worked off of. When you consolidate up there, that is not a sign of weakness. That is a sign of strength, because if it was weak, it wouldn't spend much time up here. If you notice these previous peaks, it goes up and it sells off quickly. There is no consolidation up here. Here, this is spending a lot of time. Remember, these are 4-hour bars. So this is a lot of time. That's strength. It only wants to go up. It's not ready to sell off yet. Eventually it will. There needs to be a catalyst, of course, but at the moment they're having a summer rally, as the media would say. All right. Now, with that being said, on the bigger picture, what you have to look at is the most recent levels that carry any significance. I would say that you're looking at 1679 and you're looking at 1670. Those are our most recent reference pivots. They're not the greatest levels in the world, but they are the only levels that really appear on this larger time frame, and there was some reaction off of them. So as a swing trader, day trader, even scalper, I would be watching for those levels to be retested for tricks. That's what I want to see. Either a trick off of 1679, which would put your entry level in the low 70s, or if you get it off of 1671, it would put your entry level around the high 60s. Now, why is this okay for a swing trade? Well, because you would be buying something on a retracement that's still pretty strong. All right, and it may have that one more leg up that may be worth holding for a day or two. Keep in mind, though, taking a swing trade from these levels will carry more risk. All right, the only reason why I would give it a shot, it's aggressive. The only reason why I would give it a shot is because this trend is pretty well intact. It's obviously up, and this thing, if it pulls back to one of those levels, it may give you one more run upward, possibly even to new highs. So that's the only reason. Otherwise, this area is a very risky area for a swing trade. I certainly wouldn't put one on just a simple pullback. All right, you want to see the fake out. You want to see that max fake. All right, on a simple pullback, you're asking for a lot of trouble. Most likely, you know, when you're near these highs like this, you're going to get stuck if you start buying it way up here. You're going to get stuck in a position like that. So at least let it test the support if you're going to do a swing trade. But I would be very cautious with that swing trade. All right, if it starts to give you a hard time, make sure you get out of that. Or you put your stop and let it get stopped out, whatever. Don't hold on from a place like up here. Okay? Now, as far as shorts, on the big picture, this thing has bullish momentum. So you're fighting. If you're trying to take a short, it's not there yet. It needs to prove itself by giving us an initial move, like an initial sell-off. Most likely you're not going to get the initial sell-off. Most likely. But there are ways with the smaller picture that you can use, which I'm going to cover in the smaller picture analysis, that can help you possibly position yourself for something like that. But again, you're going against the momentum, so you have to be extra careful and you have to wait for even more validation. But at this moment, it's not ready for a short. For the bigger picture shorts, it needs to close below these levels. It needs to close with conviction below the levels. A penetration and a push back above and a close doesn't count. It needs to close below. So we'll keep an eye out on that. All right. So that's pretty much the S&P. I would lean more toward the long side, especially I think the best type of trading for this thing would be day trading or scalping. That would be the best and probably the lower risk. All right. If you want to swing trade, wait for one of these extreme supports, right? Especially this one here, 1673. And be very cautious because you're still buying near a top area. This is definitely not a bottom. So keep all that in mind. Let's take a look at the Dow real quick on the bigger picture for comparison purposes. And the Dow, of course, you look at something like this to see if it can give you a clue as to how the S&P should continue to behave. The Dow also made all-time highs. The Dow is consolidating right on this high. It's been doing a lot of consolidating. All right, and here it is again, consolidating. Some people may get pulled into this double top. It's a nice idea, but you know what? You had a double top over here too. So this is not exactly ready. The double top can be confirmed when you start closing below these lows, but you have to close below. That would also, if you can close below these lows, that would also give you a heads up on the S&P. Excuse me, that this thing wants to sell, that the market wants to sell. Otherwise, watch these areas for max fakes as well. 15,490, 15,400, and if you're starting to see stabilization in there, or you start to see a valid reason for entry, that's going to give you the heads up on the S&P. Here is euro dollar on the 4-hour chart. And as you can see here, right, this was from 2 weeks ago. We had that sharp rally, held the 382. Since then, it's been consolidating. Since then, this thing has not made a higher high. It struggled here, right, with a higher low. I'm sorry, lower high. It struggled with that. Never made a lower low, though. So all these guys that got short here are paying for this, and they may be stubborn, they may be stuck in it, and maybe they're hoping for another double top or a triple top or whatever. But there's a higher low here. Now this price action these are all 4-hour bars. This price action is hardly something to brag about, as far as being bullish, because it's very slow and very choppy, and it just refuses to break this 132 resistance. It tried overnight, but it didn't go very far. All right. So you have this mixed market here. We got through those G20 meetings, and this thing just went slightly higher. So I would watch for this week. Any closes above 32 is going to confirm strength, but that close has to be on a larger time frame, and it has to be on the top of the candle. It has to be conviction, close, strong, right? That would confirm further strength. You want to be buying pullbacks if you can. As of right now with the euro, you have a situation here where you have a clear range bound. You have a range resistance around 32 even. If you want to work with that on the short side, you need to wait until this thing closes. If you want to give that a shot, maybe worth a swing trade, maybe, since you have some reference area up here. But that's aggressive, and I have to say that because you don't have a lower low here. You have a higher low. All right, so it's a mixed market. You have to be very careful with that. The only reason why I would even think about it short on the bigger picture is because this is the third time, and it's having a little trouble up here. We're seeing a shooting star right now, which still has some time to close. If you get involved in something like that, you need to see progress. If it starts closing above up here in these 32s, it's no good. Don't give it any further chance if you get involved in a swing trade. All right, that's bigger picture. Now the bigger picture long, I would wait for this level, 30-50 area, which is 100 pips lower, or this range low, 29.90s. We've been talking about the 29.90s. This 30-50 area, or 30-65, 30-50, it's the same thing. That's the area I'd be looking for the max fake as well. I would not bother with these smaller supports. I would not bother with them. They're probably going to be unreliable, especially if it pulls back from this level. This will be then considered like a triple top type of situation that may create additional momentum, or sellers may jump in on that thinking it's going to keep going. These minor levels are going to be the first to go. They're going to be the most unreliable. Wait for 30-50 area. And if that falls through, wait for the 29.90s. If it closes below the 29.90s, then we'll have a triple top confirmed, especially if it comes from here. And then that would be a new sign of weakness. That would be a new sign of weakness that you want to reevaluate from. Maybe look for a lower high after that, or see how it works its way toward the 27.50 low. Because what can happen is it may find another low in the process and then fail to go below that, which may open up a new buying opportunity. But we have no idea what that will look like. So let's just keep an eye on this. Like I said, if you want to take this as a swing trade short, wait for this thing to confirm. Still has a little time. All right, that's the bigger picture on the euro. This is the pound dollar. Let's switch to the 4-hour chart. Now we can see, and this may be helping the euro hold up. Look at this thing. This thing was the weaker of the two not too long ago, and now it's starting to behave like the stronger of the two. We had the higher low situation here, which I've been pointing out. We had the close, the higher high close, another higher low, another higher high. This stupid thing is on its high right now. This is not a short. Okay, this thing is confirming strength. So, in a situation like this, forget the max fakes right now because it's through them. The only max fake you have on the short side would be to measure this large one here, and that would be way above 57.50, so that's out of play. So what you have to look at here are the possible long scenarios on the bigger picture. And your first level would be 51.46. Your second level will be 50.21, and those will probably coincide very well with the euro levels that I talked about earlier for tricks to go long. All right, we have no failed high right now, so if it's a simple pullback into one of those levels, probably if it's going to be simple, it'll be this one. A more complex pullback would probably be this one because it's going to require more time. But if you don't really have a clear-cut failed high on a 4-hour chart or a 1-hour chart even, and you're testing this low, most likely that's going to be a nice buying opportunity. Very important point. Now, like I said, that's all I'd be watching for here. There's no reason to go short at the moment, and I really don't see any levels. Let's see, if I measure this, your first psychological level, well, it's nearing your first psychological level, which is 53.90s. Still have some pips before you get up there, but that's where your first psychological level would be. Okay, up in here. Okay, up in here. So you'd have to wait for price action confirmation in there. At the moment, you just have a bullish 4-hour candle. So no reason for shorts. Watch those levels that I mentioned for longs. So the bigger picture on the pound is pretty simple at this point. Okay, so this is the Aussie dollar on the 4-hour chart. We've been talking about this thing for a number of weeks. We are clearly in a range-bound situation. I still think that some news can come out at any point and knock this thing to new lows. The general momentum on this thing is bearish. It's trying to stabilize, but I would be very cautious with taking any swing trade longs unless you're doing it from an extreme level. I would not bother with inside the range for swing trades. Now, right now, we're fooling around with this range high. We have a higher low inside the range. The question is, can it close above this range high, this 93 area? Right now, that 93 area represents a place to open up shorts, swing trade shorts even. But you have to validate. And you're now dealing with a higher low. So there's a little bit more of a chance now that we close above. Do not just step in front of this. Wait for validation. If you get involved and it gives you a hard time, get out. This thing with a higher low, you're facing a higher low, it is more likely to go through and close above, which will change the picture a little bit. We haven't seen that kind of strength in this thing for a while. Something to keep in mind. Otherwise, on the bigger picture, for longs, I would wait for a retest of the 90 even area or high 89s for the trick long. And that is worth a swing trade now. And the reason is we've tested that level a number of times. So if it can validate in that area, I think there's a good chance that we at least retest the middle of the range. So that could be holding on. That may require holding on for a day or two. So that is the only long scenario I'm looking for. The short scenario, I would consider, actually at this point, I would rather see a test of the range resistance. Since you're dealing with a higher low, let it test and look for the max fake, okay, which is like 92.90 to 93.29. So basically in those lower 93s, let it retest. And if you can fake out up there, that would probably be your better opportunity compared to here, because you're just dealing with this higher low, and that's usually a sign that it doesn't want to go back into the middle or lower. So wait for the extreme if you must short it, since we're still in a range-bound situation. Maybe it'll retest and fall off. If you get volume analysis with that, that's going to confirm it even more. But price action can give you the validation you need at these levels. Do not take swing trades from the middle of the range. Anything can happen on the bigger picture here in the middle of the range. So don't do it. Wait for an extreme price. All right. So the Aussie hasn't really changed much analytically since we've been talking about it. Just keep in mind, if you manage to enter a swing trade on that bigger picture high, if you manage to get in up there because it validates and it starts to go your way, that is a trade you may want to try to hold on to see if it can retest that low, break and go lower, because the bigger picture is generally bearish. You may want to give that more of a chance if you could get into a situation like that. So keep an eye on this. As far as swing trading and scalping, this is not the best instrument. I have to keep repeating that. All right, so that's it for our Forex and Futures weekly analysis. My name is Mark Principato, and I will see you next week.